If you're new to trading or you've only traded stocks before, Bitcoin might be the most frustrating asset you've ever tried. I know this firsthand because I started in December of 2017 and had Bitcoin just treat me terribly for the entire year of 2018. Depending on what kind of a trader you are, you're probably used to sizing your trades appropriately, taking on risk, adding to a position when it has momentum, and of course using stop loss orders to protect against the downside if the trade goes the wrong way. Bitcoin trades wildly. First off, it'll get momentum and it will look like it's building higher highs and higher lows. So you'll start adding to your positions. And all of a sudden, it'll just dump and it will go through all the technical levels that you thought were support and just break through all of them. Alternatively, you can be building up a trade and you can be raising your stop loss order. And all of a sudden, Bitcoin will just have a wild wick and it will knock out your stop and then it will rally. I got in December of 2017 after it had hit its then all-time high right under $20,000. And I thought I was doing a good thing getting in. I got in at about 11,000 and then it dropped all the way down to 6,000 in a matter of days. And I thought, okay, it's going to recover. And I kept trading it throughout 2018. And I followed a whole bunch of experts and everybody said that Bitcoin was going to hold $6,000, that was support that wouldn't break. And that's true. It did hold $6,000 until it didn't. On November 14th of 2018, I was all in. And Bitcoin dumped from 6,300 to 5,300 in a matter of minutes. It was more than 15%, and it happened incredibly quick. Now, fortunately, I did get stopped out, but it was the biggest loss I've ever taken in 26 years in the markets. It's still now in 2024, the biggest loss I've ever taken. But I wouldn't let Bitcoin beat me. So I developed a strategy at the beginning of 2019 that I've been using ever since. And the strategy enables me to be able to take profits, which I keep in Bitcoin. And I've made a fortune doing it. Additionally, I've never had a failing trade. And the reason is how I structure the trade. If you're a traditionalist, you'll notice that this isn't typical trading because I don't know going in how long the trade's going to be. Sometimes a trade is a matter of days. Sometimes it's a matter of weeks. And sometimes I can be in a trade for months at a time. But because of the way that I've designed the strategy that I'm going to share in this video that I call trade to HODL, you'll see what I mean when I say that it has a 100% success rate. First off, we have to talk about risk management. No matter how much faith you have in an asset, including Bitcoin, there's always the possibility that it'll go to zero. Now, the first and most important part of risk management for me when it comes to this is I have to have complete trust in the underlying asset. I don't think Bitcoin's going to go to zero. And having that trust is what enables me to continue buying to it and adding to my position, even when it's sold off more than 80%. Just in March of 2020, Bitcoin sold off more than 50% in a day. And that was because of the pandemic, a black swan event. But in 2022, from the high of $69,000 to the low under $16,000, Bitcoin sold off more than 70%. This is pretty common, and I don't think we're out of that era yet. That means when you go into a trade, you have to prepare for the potential of a 70% sell-off. Now, the way I do it is to determine how much exposure I want at each of the key levels as it sells off. So I've decided how much money I'm going to put into Bitcoin and how much I'm willing to lose entirely. That's the second step of risk management. You need to have a set amount of money that you're willing to lose entirely, and that's the most you're going to put to work. You can't add to your position and get beyond that maximum. So you have to ask yourself, if Bitcoin sells off 85%, do I want to have been all in at a 50% sell-off? Or do I want to keep some money on the sidelines as it goes from 50 to 85%? Maybe it'll have a 90% sell-off. Am I okay having my position all in above 85% and then have it sell off 90%? All of these are possible, and Bitcoin's done this in the past. Just because it hasn't done it recently doesn't mean it's not going to do it again. One of the key elements to this strategy is I have to make sure that I'm taking care of all of that risk. I regularly hear people say, oh, I'm fully prepared to lose that money entirely. But suddenly the stock or the asset that they're invested in sells off to a point that they just can't take the pain, and then they cut their losses. I can't do that with Bitcoin. That's the whole point of this strategy. Those wild moves that are made aren't going to shake me out. Now, why does Bitcoin trade so wildly? Well, that's because the vast majority of Bitcoin that exists are held by a very small minority of wallet holders. When they decide that they want to execute what I call a whale dump, they can actually move Bitcoin in either direction. Now, you'll notice it more often, like a couple weekends ago, when it's on the downside. All of a sudden, Bitcoin, for no reason at all, will sell off 15 to 20%. It's this coordinated group of sellers who are pushing the price of Bitcoin down. What happens is they scare out all of the weak hands, and everybody thinks it's going to go lower. So the whales go in and start to reacquire all the Bitcoin that they sold at these lower levels, and they buy even more, but they do it over a slow period of time. This will draw in new buyers who buy the price of Bitcoin up even higher, and then the whales come in and dump it again, this time typically going even lower than the low before. However, this time they don't have to use as much Bitcoin as they did the last time because all these new hands that got in put in all these stops. So when they start the price down, it triggers those stops, which leads to a selling cascade and causes Bitcoin to sell even faster. Then again, the whales go in, they reacquire all the Bitcoin they used to start the dump, and rinse and repeat. They do it over and over again. So now that you have the total amount of money that you're going to risk on Bitcoin, it's time to make a buying plan. And there are several different ways you can do this. You can just look at the charts and go up to the top, figure out what the high was, which here is $73,797, and then use Excel to calculate percentage drops. So let's say you want to buy a little Bitcoin every time it sells off 2.5% lower. You'd make your first buy at 2.5% down, and then you'd make a second buy at 5%, 7.5%, 10%, so on. And if you're doing it the way I would do it, you'd start with a very small quantity. And then with each subsequent buy, you'd increase your quantity over and over again. Another way you can do it is by looking at the charts and just determining where potential support levels are. I use TradingView, but any charting software will work. But if you want, TradingView has a very good free account. And if you use my referral link in the show notes, you and I will both get a bonus if you ever switch to a paid plan. However, I've found that although I have a paid plan, most people don't need that. You can do so much with the free plan. It is absolutely excellent. So you'd start by looking at the monthly charts, and you can use Alt-H to just draw a line to show things like, here's the all-time high. But looking at the reverse, I'm going to want to put it at these wicks where there might be support on the way down. And you can see we can just keep adding it at all these different wicks. Sometimes when you've got 3 different wicks like here, I'll go with the higher one because I like to be early. I don't want to have it go through support, even though it typically does. But I'll just make a whole bunch of lines here on the monthly chart. And after I'm finished doing that, I will switch back to the weekly chart and see if there are other more significant wicks that don't show up on the monthly. And you can see across the board, typically, the monthly lows are key on the weekly as well. And I don't really see anything special on this, but what I might do is actually raise this level of support up here because I think that's more likely to hold than it to come down here. And you can see we've also got a level of support there. Now that we're finished with the weekly time frame, we switch to the daily time frame. And once again, we're looking for anything that's an unusually far wick. Like over here, you can see that this seems to be a level of support that didn't show up on the weekly or the monthly charts. You can also look back and see this one too, and that gives a whole bunch of different support levels. We come over here, we look at all the different prices, and we determine whether or not we want to add even more. Since Bitcoin is near an all-time high and I want to start building my position quickly, I'll probably make these all the other support levels places where I would buy too. But you have to remember the next step is determining how much money you want to put to work at each of these support levels. This is my own trading planner. I create it in Microsoft Excel, and the way I do things is a little bit more wonky than most people. First off, you'll notice that I have the amount of money I'm going to put to work and the quantity that would buy smeared out. And the reason for this is that this technique works with any size account. I don't want you to be intimidated if my account is significantly bigger than yours. That's not relevant. You can see on the far right, I've got percent of allocation. And what this means is that's the percent of the entire amount of money that I have allocated toward Bitcoin. In other words, if you had, let's say, $100,000, 0.067% means each buy at that amount is $67. I'm putting that little amount to work, and you'll see why later in the video. You can also see that the further down we go, I increase the allocation depending on how far Bitcoin has dropped. Here we've got the percent from the current price, which is currently 70,622 at the filming of this video. You can see how far down that price is from the all-time high. And then over here, I'm using levels. Each one of these percentages is a drop from the current all-time high. And you can see that it goes lower and lower and lower. The way I come up with these is I use my own chart. And here it is. It's a mess, you can see. And the reason why it's got so many lines and so much stuff going on is I'm just trying to find possible support levels. I'm not dedicated to any single idea or trading methodology. So I'll use Fibonacci retracement. I'll use different kinds of oscillators. I'll use just basic trend lines and parallel channels. I'm just trying to find possible places where Bitcoin could drop to, I could buy, and then it could bounce from that level. But if we switch back to my trading planner, you can see that the further down we go, the more I'll increase my allocation. Now you can see here I'm using flat rates all the way down to this point. And the reason why it starts to increase is I've decided that once we get down here, I want it to be around 30%. In other words, I'll be down 30% if Bitcoin gets that low. And each time I add, I want to keep it at down 30% until we get to the low that we saw in January. At that point, I really want to start ramping up my buying. So instead of buying enough to be down 30%, I'm buying enough to be down 25%. What that would mean is if Bitcoin dropped that low, I would only need it to increase 25% from whatever that buy target was for me to be at break even. At that point, I'd start trimming small amounts off the table, just because Bitcoin is so volatile that the possibility that it could go back down again is always present. But like I said, you don't have to do it the way I did it. You can just use dollar cost averaging in percentages, or you can use support levels. But the key thing to remember is how much money do you want to have on the sideline in case this is a big dump, in case what we're about to see is something in excess of 30, 50, 70, or even 90%. Do you want to be all in? Now, is it possible that we could get all the way down here? Sure, why not? In March of 2020, Bitcoin sold off 62.91% from where it was to where it stopped in that dump. If we sold off 62.91%, you could see that we'd have a price target around $27,000 to $28,000 on the low end. And it's always possible that Bitcoin could sell off even more. Now, I don't think any of that's going to happen, but I always ask myself, if it got back down to $15,000 or even $3,000, how much money would I want of the entire allocation that I have to put to work? The next part is taking profits. And this is entirely up to you. You have to decide when it's time to take profits. But what I do is every time I take profits, I only sell enough of the trade to get the original capital out. And let me show you exactly why I do this. This is the first trade that I ever did using my new technique. And you can see I only risked $100. I was buying some ETH, and after I got a 21.98% gain, I closed the trade, which left me with $21.98 in profit. However, I kept that profit in ETH, and this was back from November 15th to January 2nd of 2019. You can see that at today's prices, that ETH that I kept is now worth $524.36. This is a $22 gain that turned into $525 because I kept the profits as ETH. I made $502.38 on that $21.98. That's how crazy it is. And I've got some other fun examples from this time period too. Here's another one. This was from January 4th to February 19th. And this is why it's so important to keep the profits in the crypto that you're trading. You can see I took a $1.33 gain. I had risked $150. I got nervous or something. I closed the trade and I only made $1.33. But because I kept that profit in ETH, that $1.33 is now worth $33.70. So even these teeny tiny little trades, if you believe in the underlying cryptocurrency and you're willing to take the risk, you can trade and have a position built up that has no capital risk anymore because it's only the profits that I'm keeping in the crypto. I got that original $150 out. Here's another great example. This is 2019 from the 2nd to the 4th. This was a 2-day trade. I made $2.75 off of $55, which is a 5% gain. And that $2.75 is now worth $62.72, all because I kept the profits in crypto. And you can see the same thing works with Bitcoin. This trade went from November 19th to January 6th, back when it was nearing its low. And you can see I only had $105 on, and I only made 10%, $10.39. But because I kept that profit in Bitcoin, that $10.39 is worth $184 at today's prices. You can see that as I got more and more confident in doing these trades, I started to put more and more money to work. And I trade at a much bigger level now than I even did back then. But this trade, which went from January 28th, 2019 to April 9th, was $481 on. I made a gain of 33% or $160 in value at that time. And because I kept the Bitcoin as Bitcoin, the profits as Bitcoin, that $160 is now worth $1,705. This is why I say it doesn't really matter what size account you have, because you can see even with those smaller amounts, that tiny amount of profit that I kept in the crypto I was trading turns into huge value if you trust the underlying crypto for the long term. Now, for me, in my own portfolio, even though I do trade some altcoins, 66% of my overall allocation is Bitcoin. And then I put about 30% in ETH, with the remaining 10% going into whatever altcoins that I want to trade. But I use the same technique across the board, and I've amassed a huge amount of crypto over the last 6 years. Again, the most important thing to remember is that you can only risk money you're prepared to lose entirely. When Bitcoin or any of the other cryptos goes into a big sell-off, it can be intimidating. I was buying Solana at $8 when it was at its bottom. But since I didn't have as much faith in that crypto as I do in ETH and Bitcoin, I didn't nearly have the same amount of exposure. A perfect example of why you need to be so careful was that I was also trading Luna when it collapsed in 2022 and basically lost the entire trade. But again, I was risking a fraction of the amount of money that I'd risk in Bitcoin because I didn't trust it. With good reason, obviously. Does this sound like a good trading plan to you, or am I making a big mistake? Please leave your comments and let me know what you think. In addition, if you have any questions about what I've outlaid here, you can do that down in the comments too, because I read every comment. To learn more about what happened to me in 2018, watch this video here, where I go over exactly what it looked like and the lessons that I learned from that giant crash.